Hey guys, Max here, and today we're talking about China and the tech crackdown across China in particular, how some investors have deluded themselves into thinking that China is an investable environment, and of course the reason we're actually talking about this today, a brand new development regarding the tech crackdowns on Tencent and Ant Group. Now very briefly, what is the actual background to this whole topic? Well, over 2021, China started to attack companies that it deemed to be too powerful or too influential. Tech companies in particular were targeted, ones who collected and stored loads of data, ones who had huge margins or just made a hell of a lot of profit. Basically, the biggest companies in China, Tencent and Alibaba being the two huge names there, and some of the biggest companies in the world as well. Now, probably the most infamous example of a regulatory crackdown by the CCP was Didi, a ride-hailing app, basically a carbon copy of Uber for China. Now, it was a very successful company. It was a very successful app. It had millions of users. It was growing really quickly and it wanted to go public, but it chose to do so in the US. Now, the CCP was not happy about this. They freaked out, they got very nationalistic, and they basically shut the app down. They banned the company from signing up any new users. They shut down their entire growth, and they crashed their share price as well. They targeted this company and ensured that it wouldn't be able to compete or grow into the future purely because they dared to list in the US instead of in China. Now, Alibaba, which is practically just an Amazon clone, it had fines of billions of dollars as well on, again, nonsense charges under the guise of common prosperity. Supposedly, and if you take the CCP at their word, which is an awful idea, the money will go to helping the poor in China, helping to redistribute the wealth, when in reality, it will probably go more to furthering the genocide in Xinjiang and building useless railways all across the country. Tencent as well saw similar fines, again on nonsense charges, basically just random at-will taxes that the CCP was implementing on these companies, mixed in with some regulatory crackdowns to ensure that those who ran the companies knew who were in charge. Now, Chinese tech companies fell throughout pretty much all of 2021 off of these fears of the Communist Party crackdowns, targeting more companies and getting stricter on the companies that they were already targeting. We saw dips of these major world-beating companies like Alibaba of 20%, and people started to buy these dips, but the crackdowns kept on coming and naive investors kept buying the dips. The idea behind all of this investment was that China wouldn't want to kill their best companies, but they already were killing their best companies. Now come 2022 and things seem to get a little bit better. The Chinese government started flooding the market with liquidity to help falling asset prices. Then the Chinese government went around and they forced 15 banks and institutions, the largest ones in the country, to buy up Chinese assets all at the same time at pretty much gunpoint to artificially inflate the markets as well. A couple of weeks after that, the Chinese government itself started buying up assets, stocks and bonds and equities and things like that to inflate the markets even further. Now, those idealistic investors who bought these Chinese companies before, they thought that the tide had changed, but in reality, it hadn't. The CCP is just trying to limit the damage they caused, and they are still causing, and that damage is going to keep coming. Now, what is the new development that we're actually talking about today? Well, it's about these rumors in China that Tencent is about to get hit by regulators again. Evidence of a soon-to-hit crackdown on companies has been getting popular, and most people seem to believe it's true. The crackdown will supposedly target gaming companies in particular, which is very on brand for China. In the past, they banned certain gaming for kids, they limited the amount of playtime, and they hugely damaged the Chinese gaming industry. Now, Tencent quickly came out and categorically denied these claims. They said that nothing was true, that they weren't going to be attacked by the CCP at all again, and they got really quite angry and upset. Their statement was slightly deranged, and it was basically just trying to stop rumors and stop their share price from tanking. Nonetheless though, this didn't really work, and Chinese tech stocks had their worst two-day performance for the last 6 months this week. Tencent dropped 4% in value overnight. Alibaba dropped 4% of value overnight as well, as did Meituan. Now, these are not small companies. They are worth hundreds of billions of dollars each, and the Hang Seng Index, which is characterized by tech companies in China, much like the Nasdaq is in the US, it fell 3% in one day. Needless to say, these are some big hits to a strong start in 2022. Now, the second development is regarding Ant Group, a payment processor fintech firm that was banned from going public just before last year after its founder Jack Ma spoke out against the CCP. Now, the Communist Party is basically demanding that every bank and institution and major company in China declare their relationship and their exposure to Ant Group. Now, this has understandably terrified investors. It's seen largely as a precursor to action against Ant Group, and why wouldn't it be? The CCP wants to know what impact sanctions or targets against Ant Group will have on banks, institutions, and other companies in China. And they're doing this because it's very important, as debt markets in China are absolutely awful right now and fraught with risk. The entire credit market in China is on the brink of bankruptcy, and it will collapse over the next year to 2 years. It's just a matter of time. Basically, what we're seeing right now is that China's crackdown is continuing, and it hasn't stopped, and it's not going to stop. And the reason is because of the fundamental aims of the Communist Party. Now, lots of people, most investors in Chinese companies, they don't actually understand the CCP and they don't understand their targets, and that's why they never saw these crackdowns coming down in the first place, and that's also why they are surprised again today. Now, as I said earlier, these investors think that China wouldn't want to kill their golden goose, but that's where these people are wrong, and that's why these people have lost so much money on investing in Chinese companies. The fallacy here is that the CCP doesn't actually care that much about the valuations of its companies. It cares first and foremost about control. Dictatorships and authoritarian states, they do want powerful countries. They do want wealthier citizens because it means more power and influence for them, and they are notoriously power hungry. But what they care about more than that is remaining in control. Dictatorships would rather control poor countries than not control rich ones. And this is a perfectly natural idea for them, and it shouldn't be shocking to hear. The CCP's #1 goal is control. There are 1.4 billion people for them to control. There are huge amounts of land for them to police. And the CCP wants companies like Alibaba and Tencent to be under their control, not the other way around, more than they want those companies to succeed. Now, at a time when people in the US and the rest of the West as a whole are very scared about the influence that Google, Facebook, and other companies like that have over our societies, this again shouldn't be surprising. Now, this is why they're willing to destroy the valuations and growth prospects of these multi-billion-dollar companies. And this is why there have been loads of other regulations coming in against these companies as well. These companies now have Communist Party officials on their boards. They are directly overseen by the CCP. Now, the party members who have been given those positions aren't there to help the companies grow, expand, or succeed. They're politicians, they're not businessmen. They couldn't help the companies grow and expand even if they wanted to. They are there purely to ensure that the companies stay in check, that the people running those companies stay in check, that they remember who's in charge, and that they stay under the control of the CCP. Now, just like with Ukraine and Russia and that whole situation, you need to understand the actual motivations of the parties at play, or you will be continuously surprised by what happens. Don't expect China to care about their own citizens' wealth, let alone Western investors' wealth either. We should expect China to keep companies from being too powerful, and if they get too successful, like Ant Group was looking like it was going to be, we should expect crackdowns to continue. We should also expect China to ensure that people like Jack Ma stay in line, and if they don't stay in line, they will lose their power, they'll be forced off of their board seats, they won't control the companies that gave them their influence anymore. We should absolutely expect huge volatility in Chinese markets for years to come. Now, you can make money off of that volatility, but it is incredibly risky, and there's just as good a chance that you'll lose everything as well. And you need to be aware that if you do invest in companies like Alibaba, then you are supporting a company that aids and abets an authoritarian regime that's committing a genocide as we speak. Now, to be perfectly honest, I know this isn't the case for most people, but that alone should be enough to convince people to put their money elsewhere. Now, that is it for today, guys. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world-famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, you don't have to buy anything, you don't have to hand over any card information, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Just make sure not to use Tether. Thank you all for the support, thanks for watching, stay stoic, until next time.